You're watching Master Trader Live, simple market analysis and education to help you make money in the markets. Join us live each week on YouTube and see past episodes at Master Trader Live. And now your show hosts, Greg Capra and Dan Gibby.
Good afternoon, everybody. Welcome back to those of you that join us each Wednesdays. Those of you that are new, welcome as well. And I'm sure you're going to love this MT Live, like all the others. Today, we're going to be talking about volume. When does it matter and when doesn't it matter? Very specific criteria for that. As you'll see, we call volume a secondary piece of information. That doesn't mean you don't need it. It means that you don't trade volume, you trade price. What you'll see is that some of the information that's broadly accepted related to volume really leads you down a rabbit hole, so to speak. It sets up expectations, and this is so much of what is technical analysis about, is that technical analysis, not depending on any which way you approach it, sets up a belief system. Meaning, if you have a certain way of looking at your charts, whether it's the way we do it, or whether you're using the indicator-based methodology, what you look at is going to set up a belief system as to what you think the direction of prices are and turning points. And of course, when to take positions or not. So as it relates to volume, there is information that suggests prices can do this and they can't do that. And just a simple observation of accepted practices, beliefs, will lead you to question those beliefs. And at that point, you start to look for what really matters and what doesn't. And that's what we're going to talk about today. So let's continue to do that, Dan.
Welcome. Good afternoon. Yeah, and as I said, Greg, in the green trading room today, this might sound like a mundane subject, but there's so much misleading information on it that I think this is going to be a fantastic eye-awakening session for new people who have been trading 20 years. Because as you said, we're going to explain with words and pictures of when it's important and when it's not. So, we have some fantastic slides here. We'll save time as always to look at some real charts together. So this is our approach. Greg talked, a little bit about it in the intro, but we trade price. Okay, so we're technical based. We believe what we don't believe, it's a fact that candlesticks represent the sum total of all market participants, and they paint a candlestick. So you can't argue with that. You can't argue with the open and the close and the high and the low. And then we put these pictures together to make trading decisions, and then we overlay our other concepts that make up our total approach to decide whether we want to take a trade and hit the mouse to buy or short something based on our other combined concepts here. That's what trading's all about. Multiple time frames, that's another one. Or whatever time frame you're trading, are you fighting another time frame, or are they in alignment? We'll show you examples, support and resistance. This pattern that we're trading, bullish, is it on support? Resistance if you're going short. This is, I use the word McFly because I'm silly with my analogies, but Greg says, look to the left, that's where support is. And that's an integral part of our technical approach. moving averages. So both moving averages and volume analysis they're both secondary to us. We did an MT Live recently on moving averages about, how to intelligently use them again with the patterns on top in terms of visually speeding up the analysis, short, intermediate, long-term trends, converging moving averages, etc. We don't need them, but we show you how they're a plus. Same with volume. This is one of Greg's quotes right here. It's the money behind the candlesticks. Right here, this line right here. Patterns, so that's the first one, are a picture of psychology in motion fueled by money. What does that mean, Greg? Psychology in motion.
Psychology is based, when I started with the intro, beliefs. So however you create your belief system as relates to technical analysis and trading, what you look at will create bias, buy, sell, or hold. So when we're looking at charts, we're seeing interaction between buyers and sellers, and we review the trend, support, resistance, and candlesticks, individual candles and patterns that they create. So the trend, if it's going up in multiple time frames, would suggest the psychology is bullish. We believe buy the dip, it's bullish. Now, as we look at more detail, right, we can recognize, which if you've been in MT Live before, we look at failure patterns, we look at failure bars, we look for those pictures that tell us what others are thinking, right? What's their psychology? What do they believe? Do they believe it's going up? Do the more believe it's going up than versus going down? Or is there just mass confusion, which is a recognizable pattern as well? So all of that is created with money. So we know that it's not like, oh, I think, whatever, XYZ should do this, this, and this. Well, did you buy it? Did you short it? Well, no, I just, I heard someone say it. Well, we know when we looked at the chart and we look at volume and we can assess the level of volume, was there an event? Did something happen? Did it break out on volume? So we'll look at all that.
Yeah, and I know it's elementary, but let's define what volume is. It's, you always have a buyer, you always have a seller. If you're trading stocks, ETFs, whatever, it's the number of shares being traded at that price. You can look at time and sales of all brokers, and they add them up, and that's the total volume or total number of contracts. So that's what we're going to look at, of saying, okay, how do I use that in connection with these? Excellent indication of igniting points, turning points, and then, I don't know the word, cruise control points. It's like, oh yeah, this is constructive volume for the trade I'm in. Position and money management, of course. If you don't have that, then you're probably not going to succeed at this. Money management, calculating position size, etc. Stop loss, trade in between. So now we're going to, from here, we're going to be analyzing our candlestick patterns. Notice on here, you don't know what time frame it is. You don't know volume, moving averages, multiple time frames, anything. All of these are independent bullish setups. And then we overlay the other concepts that we just reviewed. And so we'll be doing that today, putting volume on top of these pictures. All right, a couple definitions here, just as before we jump in and apply these. So igniting volume ignites a new move with a confirming pattern. So we're going to see a big spike in volume on a gap reversal, a bullish, bottoming tail, a wide range igniting bar. We want to see more market participants being involved gives us more confidence that's an igniting volume. Climactic volume, we just say, you know what, this thing's been going up 10, 12, however many days, and now you're giving me the biggest volume spike. And you got to think psychology on these volumes. So it's like XYZ, Bitcoin, whatever, is up 50%. And now I have the most amount of buyers coming when it's up 50%. And that's like the last of the Mohicans coming, the Johnny come latelys, the greed. And then, as always, price tells us what to do. Now, we came up with this term, committed volume. The volume supports the trade. And that's on the last slide, I said cruise control, so to speak. So the trade's working as intended. I got good volume. We're going to show you some examples where I don't have volume, but does that matter?
But Dan, what is the message of the smoking tire?
I was just going to say that.
Okay.
That's going to be the foot on the accelerator or climactic volume, and the price action is not doing anything. It's not doing what it's supposed to do. So I have a great example or two to illustrate that. So with price action, the chart that I have, there was, just to give you a heads up so you can put it into perspective, it was a nasty gap down, ugly reversal bar, tons of volume. And so that's my spinning tire. It's like, this should be going down, and it's not. So the message, let's save it for when we get to that chart. But that's the implication of that to me, because I put it there. All right, so why don't you talk about this slide? You love oscillators, and what does this do?
Oh, you threw one of those in there. Now, what is this? Some kind of histogram?
Yeah,
oscillator, and I don't know what that is down there. ADX or something. So this is the indicator-based methodology that trying to figure out. So what is a histogram? If it's some kind of a MACD thing, it's the difference between two moving averages. The first thing you want to do with anything you look at is demystify the holy grail aspect of its ability to call the direction of prices. So any type of histogram type of situation like this, like a MACD indicator, is the difference between two moving averages. And if it's below the zero line, the shorter is below the longer, and vice versa. If it's above, and then it measures the distance between those moving averages. So the further they get apart, the more this histogram grows in size. So when we see something like that, and we see green, is that supposed to mean buy? And here it's green and it turns right back down again, but it's in a downtrend. And then depending on your oscillator and your settings, does it reach an extreme overbought or oversold? And then got some trend analysis thing. So you got a whole stack of indicators there to tell you what's going on, when all you really need to do is, oh, that's in a downtrend. It had a retracement. It's at resistance. Where's the volume? Hey, there's no volume. It's a narrow range bar. Maybe there was volume there, but it looks like it's going to stall. And as I look at all of this, and I'm like, well, that's green. That's an extreme. This, I don't know. Get rid of it. Rid of it.
All right. I like
to show momentum. So BBC, doesn't that show you momentum? Doesn't a wide range bar show you momentum? It's a different way of showing momentum. That's a breakdown from a consolidation, where this is a bar by bar moving up with relatively narrow range bars. But if I squish them together, it's one big bar. So that's momentum. I don't need any of this stuff to show them look at momentum. I just look at the chart. And that's part of the theme of what Dan and I do at Master Trader, is to take you away from all the hocus pocus and look at what matters. It's like, let me make an analogy. It's like, someone telling you to cross the street with your eyes closed rather than looking to the left and the right to see other cars coming. Why should I believe something other than just looking at where the opportunity is and the risk? You're not able to trust yourself, then you need a Master Trader course. Repetition. Spend some time with Dan and I in the green room. And you know what? Ask questions.
All right, so we do this many times. We just throw a chart up here, and then we'll come back to it. So this is a daily chart, color-coded candlesticks, color-coded volume. We have the 20, 50, 200 on the daily charts. It's all we use. None of that oscillator stuff. On this particular trade, we shorted a put spread, which is saying, yep, I think this is a nice bottom. I'll take the premium. But what I'd like you to do just in your head for 10 seconds, look at the volume spikes with the pattern and trader psychology. So here I see increasing, that poked up, that one jumped out at me, this one jumped out. Here I got two, here I got two. Do I need it? Does it help? We'll come back to it. These are definitions with a beautiful visual aid, wide range igniting bars. So I'm defining the bar, but I'm also now looking at the volume with the bar. Wide range igniting, wide range ending. So the first one's the ending. So we have think of this trader psychology again. Selling, 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 selling. Remember my hypo a few moments ago? That is the biggest ugly red bar on the biggest red volume, closing at the low. The next day gaps up. This is what we call a Master Trader 180 reversal on even bigger volume. So would I trade this the same? Yeah, but these two volumes bars increase the likelihood to me of that reversal succeeding, of showing it's the last of the Mohicans for tradable bounce.
Oh, momentum, right? BBC, momentum. It's momentum stalls, momentum increases, and wide range bar suggesting the end of the move on increasing volume. Capitulation. I've asked this question before in MT Lives. Have you ever been long a stock and sold it at the low of the move? I should see 100 yeses. Come on, cough it up. Tell the truth.
We call it your puke point. It's like, I can't take this anymore.
Right. So how do we come up with these concepts? Well, many, many, many years ago, studying these charts, and then how in the world did I sell the bottom of the move after holding on to this and going through this pain? What can I learn from this? Don't buy it after it's going up 10 bars in a row, maybe.
All right.
But here it is. How did you sell the bottom? How you didn't know it was the bottom? Well, the honest answer is you don't really know it's the bottom, but in the moment you are so sure it's not the bottom that you sell. You're super convinced. And from that point, it was like, is there a picture? So this is the advantage of a trading journal. Besides, you see what you did wrong, what you see you did right, which is covered in the swing trading course, how to set that up with software that you already have. But as you keep that journal and you start looking at mistakes, there's a recurring theme. So what I saw many years ago is it's a wide range bar ending. How do you come up with that concept? Well, because that was Greg selling over here. And it's like, okay, there's the picture. Now, what do you do with that? Well, of course, you're not part of this anymore because, you've learned to take your stops appropriately with share sizing. But when you see this and it looks so convincing, it's going to go lower, like, okay, let me see what happens. And in this case, you had even higher volume on that reversal bar. So at that point, it creates support. And so it builds what we call the thought process. It builds support. Once it has support, we assume buyers would show up there again. Assume. Wait to see what happens. And you can see the nice, beautiful base here, and moving averages coming together so nice and tight. And then, you can see the breakout. It's clear as day. But it's a little more enlightening to see that kind of volume. That's committed volume. That's institutional volume, which then suggests they're going to be buyers on the dip.
John, that's exactly what today's session is about. We're saying we could trade without volume, and we're showing you with the pattern of how to intelligently use it to give us more confidence of the pattern. And I'm going to show you some examples of, look, we still traded this and I don't have volume. So, be patient, please.
And what you said is the key word. The key word is confidence. So if I could trade without it, which I can trade without a lot of things, I just can't trade without price. And I can trade without volume. And I don't have volume on all of my charts, but on a daily chart, I have volume because it's, the biggest time frame, more of a universal time frame. I don't really need the weekly. It's helpful, but the daily time frame gives me a lot of information. I don't need the intraday to trade daily and so on. So the daily, I think, is the most important. Now, when I see, a bar like that, I don't need the volume, but if I see the volume like that, I know it's institutions, and it just gives me a little more confidence in that, it just dwarfs all the others. It's like humongous.
And just one point of clarification, we called this a wide range ending after the fact. Once we got our 180 reversal, this could have very well gone down 3-5 more bars. So don't ever just jump in front of a freight train saying, oh, this looks like this picture. Dan said it was a wide range ending. No, it means it's getting close. I'll watch it every single day. I'm close to a reversal. I'm waiting for the picture of the reversal. So Greg, this was your GLD trade in our ETF trader. I only have 3 circled here, so why don't you take it? It's pretty self-explanatory. We got 2 beautiful bullish ones, 1 ending one.
Sure. I'm just reading a question here from Ortiz. It says, does VZA volume spread analysis work? Ortiz, I'll honestly tell you, I don't know what volume spread analysis is, but if you explain it, you tell me what that is, I'll tell you what I believe it is. Anyway. So this one, clearly, look at the moving averages intersecting prices, and then you get a breakout above that area on volume. What does that tell me? It should keep going up. Wide range bar on plus volume should keep going up. What do I do? Well, you could just buy it above the high with a stop below the low.
That's what we did.
Over here, you got volume. I'm just eyeballing this, Dan. Is it on? Let's see, is it on that board? Let's see here.
Yeah, this WRB spiked a little bit right there, but not enough for me to circle it.
Or trying to line it up. So
you're right. That one is.
Yeah. It breaks out on volume. It broke out. Okay, there's a volume spike. What does that tell me? Buyers should keep coming. Right. volume spike on a gap up day and a reversal. Shouldn't have been buying on the gap up, after it's going up and up and gaps up as it is. And so now, at a minimum, it just tells me that the momentum is going to stall and it's going to consolidate. It doesn't mean it's going to, crash or anything like that. I mean, it could eventually even be a red bar ignored. We just don't know. But what it does tell me is stay away for now.
Well, and we were in management mode, as you can see by this closed trade. So we were in this 39 days. We sold a third into this one. I'd have to look at the date on the other one here. I think on this doji right here. And then we took our final third. We like ugly reversal, just get out of the last part. $840, beautiful gain. All right, so here we can start going a little bit faster now. Consolidation, flat 20, flat 50. This is the biggest green bar, closing breakout on increasing volume. This is beautiful volume. I'm in management mode. That's nothing. It's good volume. Consolidation, ugly gap down, look lower, look at how many market participants started selling. Now, we never know how many, unless you own the brokerage firm and you look at their ticket, sell to close or sell to open. But that ugly bar is this red bar. So selling picked up and the bias looked lower. Now it was a pro gap breakout over a red bar on the same amount of bullish, huge volume. So they supported it. So what do we got here? Pullback, little breakdown failure, snap right back and going sideways. So why am I talking about this one volume? Well, it's on this breakdown failure. So when this broke down, it's under the 20, under the 50, has a price void. So Greg, this is a sign of your institutional buying saying, I'm not letting it go down any further. You all can throw as many sell orders at me and it's being absorbed. So that is a definite focal point of start watching. It doesn't want to go down anymore. Does that mean I buy over the high of that green bar? No, I don't have a pattern. But it means start watching. And so this is kind of an inverse head and shoulder. We just call it a breakout and, multiple time frames. I'm not showing it to you, but it was a buy setup on the weekly chart. So we bought right over this 1, 2, 3 right here. We got the benefit of this gap up, beautiful return. We just sold in the strength. All right, let's talk about the volume on all of these arrows that I have pointed.
That's a lot of work, Dan.
Well, then we can go faster now. We've actually covered a lot already. So so this is a green bar on this green bar. That should have gone higher. I have market participants supporting that bullish bias. Now I have a breakout failure. Now this ugly red bar is on the decline now. I'm waiting for my pattern. Probably on this bar, when it traded under this bar, I would have started shorting, selling out of the money bear call credit spreads. My 20 and 50 are now solidly rolled over. So Greg, what about this red bar? Now notice how this red bar is different than the page we showed you of wide range ending. And the reason for that is the other one had a more what we call fluid sell-off that got far from the 20, whereas this was a new closing breakdown. And now that's just a continuation of this breakdown with people bailing. So I know that could be advanced and it should be, and that's what Greg's course is all about. So I'm not doing anything there. It's still bearish. But yeah, why don't you take the last two there?
Well, I'm pointing out these volume spikes. How do you measure a volume spike? It's just a spike bigger than the others. How do you recognize a wide range bar? It's just a lot bigger than the others. You don't need to measure it. It just jumps out at you. And so, seeing, a volume spike like that and a wide range bar breaking down, when I see the wide range bar, it's been going down for a little while. So I think, oh, that thing might stall, but it's probably going to go lower.
Right.
Yeah.
Right.
And so seeing this doesn't mean think that. Doesn't mean that. But now when I see this one, which does make sense, it went sideways and it couldn't go up, and then it breaks down again on that kind of volume. Okay, it should keep going lower. And this is where retracement analysis comes in. Meaning, okay, here was a red bar right there. What I'm thinking at that point is, okay, if you can take out that low, I'm thinking lower. I got to look to the left to see is there any support in this area. I don't know. But when I see it come all the way back up again, and this is really jumping out at me like a wow thing, right? Not like that one, but it's something. But really, I see this sideways consolidation and this didn't follow through. Now I'm interested in thinking higher. So on this bar, there was no volume spike.
Mm-hmm.
It's okay. It's okay.
Right.
Sometimes prices go up on low volume or vice versa. But it cleared the high, and that suggests to me it's going to go higher. So how do you make money from that? Well, you either just buy it, or you can do, a credit spread. I just believe it's not going to go down, and you look for premium down here. You do a credit spread, and or just buy it. You could buy a call if you want.
Sure.
Yeah.
And
Equivalent to a bull 80. Yeah. So this gets into, again, a deeper understanding of retracements. This is really what we refer to as a shakeout pattern. Why is it a shakeout pattern? Because that's how you define shakeout patterns. They go sideways. In this case, it went down. It's a deep retracement up, and it goes sideways. Somebody might say, isn't that kind of like a head and shoulders bottom?
Yeah, it looks like that too. Sure.
Yeah. But so as we get into the minutia of explanations of patterns, where we could say, all of them, a head and shoulders bottom or this shakeout is preceded by a momentum move down, right? And the shakeout of the head and shoulders, head and shoulders bottom is defined more of having, rounding shoulders versus square shoulders, let's just call it. In any event, they all break down lower, depicting a failure and a deep retracement. And in this case, the downside shakeout is, I believe, a higher probability pattern because it's more evident that it's going sideways at resistance, and the move above that is, clearing a resistance area, whereas your head and shoulders pattern is defined by breaking a neckline. So unless you had some type of a reversal pattern down here to get long, to buy this, you're getting in after a already extended move. So you better have a position and money management plan.
Yeah. And multiple time frames supported that daily swing. All right. So
Well,
here,
to the facts.
yeah. All right, so here's my spinning wheel, and I'll let you see it now visually, Greg, and give your comments. So this was a nasty gap down. Actually, look, this volume started ahead of time, but it didn't move. Now I have my nasty gap down volume. So my interpretation of these two nasty bars on this volume is short the low of these two bars. But it's not.
All spread.
Yeah. So this suggests lower prices. My accelerator is on the wheel of selling, and it doesn't go down anymore. So that's why I'm saying the accelerator is volume, the tire spinning is volume, but it ain't moving. So that's information right there. Tells you something. Same on a breakout, you know, the opposite, obviously.
Without knowing the stock or what the market was, and of course seeing what happened afterwards, but for this gap down to get bought like that, and look at the moving averages were rising. You know, it made kind of a flagging kind of a pattern, and it moved higher there. It was overall a nice pattern, like it could have potentially went higher from that point.
Mm-hmm.
So it was clearly a shock type situation that for whatever reason it gapped down and buyers stepped up and they formed that bottoming tail bar. So there's nothing to do. It just jumps out at me as like there was a shock element to whatever happened there. And then, and again, applying what we're talking about here, you know, bar by bar analysis and retracements, we're talking about more than just volume. But one of the takeaways from looking at this chart and some of the others is that you can't get stuck in the past, because this creates a belief that thing gap down on big volume. And now, okay, it should maybe keeps going to keep going down, but it recovers. So at this part of the chart, especially on this wide range bar here, you know, you got to be thinking it's going to go up. So that's a big hurdle, because we all want to be right. And once we make a decision about what we believe is going to happen, you need a method that can take you away from the past.
All right, so this was our wide range breakout for a little swing trade. Did I expect it to blast through all this resistance? No. But I have a question here, Greg. There's no spiking volume on this. And I'm saying, doesn't matter. Does it matter to buying over the high of this bar?
No. Well, because you would not take that trade because there wasn't high volume on that bar.
Right.
You would.
Right. So here, ugly 180 reversal, far from the 20. This little red one here. So volume did pick up. That suggested lower prices. Bullish price action, another 180, bullish price action. And here's where we gave this to our subscribers for this little swing trade there. No volume. Doesn't matter. So our green room is where we trade, we scan, we educate all day. And we have Greg put together this special last week for you. And you can get 2 months at the price of one. So there, he just gave it to you. And this is just a different link, green 2-1. Come check us out in real time. And you'll be amazed at how much you learn and watch us implement this in real time. So this was when oil was bottoming out. We're pattern traders. This is a big bottom. And then we got pickup in volume on this. That's when we gave it to subscribers. So, I'm not trading the volume, but this is just a picture of the committed volume that we said. Volume did spike on that WRB, and this is just nice volume, but we've shown you examples where it could keep going lower. This chart and internals was actually, I grabbed this during the COVID low, but it is such a beautiful chart showing many concepts. I never in my 25 years of trading have seen the market internals cook this badly. The VIX volatility index even went higher than the 2008 financial crisis. So today we're talking about volume, right? And remember I said in that wide range ending bar, don't buy a falling knife. After, how many days is that? 10 days, far from the 20, puking volume, internals cooked. We were salivating for this turn. We need a picture. We've been emphasizing that. And my recollection is the turn either happened the next day or one day after that, maximum. That was the low in the COVID of the COVID days, based on this picture, these concepts that we're going over with you today. Just another picture, climactic volume. It's the opposite of this. This is puking climactic volume. This is puking bullish volume. It's climactic sell setup. This thing rallied from look, it rallied 719% from here to here. I put a rocket ship here with this fuel to signify, unless this stock gets bought out, it will come back when the jet fuel runs out. What's this jet fuel? Volume. Sellers being greater than buyers. So I will watch this every day. Like I say, don't just buy, you need a pattern. This thing could double from here. Of course it could. This thing can go to $40 before it runs out of jet fuel. But this particular day, it gapped up. There's a 15-minute chart, ran, 180 reversal, failed 15-minute buy setup. That's where we said, I have the confidence. This one we sold an out of the money naked call. This is astronomically high premium because of the greed built into this stock. And Workhorse, I think, is one of those EV stocks. So this is, when they all were exploding. But look how
it's $1 or something now.
really look how
Been crushed.
helped us. This was just the other day. This, whatever the heck this IZM is, I even posted in our Facebook chat. And I even typed, when is the jet fuel going to end on this so we can short it? Look, there's no volume. Well, granted, the high volume scrunches the old volume, so keep that into perspective. But everything we've been talking about here today.
16 cents, Dan.
Wow.
Yeah.
So Greg, explain. Oh, all right. No, so all this volume, last of the Mohicans, we had this for our subscribers to short under a prior day's low. It gapped down here this particular day, and look at this parentheses. Look at this volume bar after 20 minutes of trading. That is igniting volume of dumpage. I don't know what the story is behind that thing. All right, so now, Greg, this was the same chart we started with. It was Bitcoin miners. We sold this W bottom. So, here I'll go through this one, and then I have one more here we can do real quick. All right, so here, flat moving averages, the whole sector and related stocks were moving. This is positive volume on the breakout. Broke out again. Okay, so I have increasing volume on this secondary breakout. Now it's a climactic sell setup with a bearish gap down. Look at the biggest volume on that reversal. So we would have this as a short under the red bar's low. Volume supports that bearish reversal. It's stabilized, after down a lot, gapped up, sold off again, even bigger volume than the other one. Stabilized, this bounce, pick up in volume, that's good. Retest, big old W bottom, red bar ignored, pick up in volume on the breakout, a plus. What do y'all think? Have you learned a ton in 46 minutes? So, you can do this one quicker. It's just another example. Pick up in volume. This volume to me suggested lower prices. So that NFT means no follow through. Pick up in volume on this crack. Pick up in volume on this crack. Big volume on, let's just call it a 3-bar reversal. Consolidated, nice little closing breakout here with price void means look to the left. There's insignificant resistance. My entry would be over this green bar, stop under the low. This is, Greg put together this special last week, and we're giving it, just offering it to you again here today, and then we'll switch over to real charts. So our advisory swing and options letters, where we give stock, option, crypto trades, we trade anything long or short. Greg does detailed market review. We're throwing in these other little educational webinars. We're going to give you 2 months for the price of one to check out our advisory letter. All right, that's it. We're ready to switch to charts. We'll, as always, answer any questions you like, preferably with a twist on the day's subject, but not required.
So we have requests for the answer. It is asked for a breakout. Do you need 3 touches of resistance with high volume for success? Absolutely not. These generalities are something that you saw in a webinar at some time, showing some thing as if it has to happen that way. It does not have to happen that way. Patterns can happen in an endless number of ways. So concepts like bar by bar analysis and depth of retracement, support, resistance, bullish price action, all of those things tell you what to do in a changing market environment, which is what we communicate with everybody, that look, market environments change, patterns change. You get hung up on thinking it has to happen this way, you're going to be frustrated. So you have to be flexible as to, what is possible. But the foundational concepts we're talking about here will guide you as to, what you should be thinking in the moment. So I just brought up a chart, General Motors, giant volume spikes. So look at this one over here. So here was, 3 touches, if you will, creating support, and then you get a giant volume bar right into the top of the range. Well, that building the support, you'd think maybe it could keep going higher. Well, something else that I've said a million times, bottoming patterns are treacherous. They are, because look, you have something that came down so aggressively, and over here it went up so nicely and then fell apart. You've shaken the confidence of longs I don't know what confidence they have left after this and then topping out, but you can see the failure here. So now it builds support. And look at the volume as it spikes back up again. And so over here is where it starts to become more attractive, where it's, big volume spike, wide range bar. And you can find these wide range bars with the scans that we share with everybody. So now this certainly looks like it's going to continue to go higher. There was good volume yesterday, but this is institutions. Look, this is institutional volume. This is a very liquid, high active trading stock. These are institutions that are buying this. This was a gap down. Right? They're buying the dips. So that tells us they have a belief that prices are going to go higher. It's got room to go up. Let me show you something else that people get hung up on, and then I'll explain this VWAP that Don wants to know about. Anything you put on your chart is going to be secondary, but this is another volume kind of thing that people get hung up on. Looking at volume like this, like it's a volume sideways histogram, where it puts the volume, right? Where's the most trading volume? So as a visual aid, you say, oh, look at that. And I would say, McFly, remember the movie McFly? Hey, look at all the consolidation that's over there. All this price action happened in the same area. There has to be that kind of volume. So you get these points of view as to volume looking at this way, and maybe it's a bell curve and, like a market profile. But when you understand the concept of a tradable void, we covered that a few weeks ago. Momentum moved down and sideways through time. You know that there's a void. You don't need to look at it in this way if you understand the other concept. Right? How do we know for sure the bottom ends? You'd have to talk to somebody. He's passed away now, but somebody like Madoff. Some genius that never loses money. How do you know when the bottom is? There are clues. So I'll give you one of the clues. One of the clues is that bottoming price action. This is too extreme for it, but you often have situations like this where it bottoms out and it makes a spike that's so convincing that you'd swear, it's going to continue to go higher. Now, it doesn't always fail, but most of the time when something is bottoming out, the first time it spikes up, it fails, and it fails miserably, and then it comes back again. That's, part of the bottoming process. So when you look for bottoms, one of the things you want to recognize that puts the odds in your favor is to find the ones with failures. Those that are chopping sideways in a more controlled manner are the ones that are more suspect. The ones that are very violent, spiking down and up, are the ones that display the capitulation. VWAP. This is kind of like a VWAP, right? Volume weighted average price. So as you look at that, and there's another way that some look at it, they use this anchor thing, which, look, 99% of the time, if not 99.5% of the time, when you put this kind of subjective stuff on there, it'll probably line up with some point like it did here. And you see there's congestion there. Did I really need to see that? Was I going to place a short sell at that line because that line is there? We don't trade based on squiggly lines, meaning we don't place open orders based on some squiggly line. And then this kind of thing gets into picking different spots, meaning, all right, do I pick that? Seems like an important spot. Now it never touched the line. It never went to the line for you to buy it. So you must have put the line in the wrong place. No, I mean, that's a significant point. Maybe you needed to put the line, the dot, connect the dot over. That didn't work either. Well, maybe I got to put it over here. That didn't work either. See, don't need this kind of stuff. Just look at the price action. We wanted to look at GDX, XJ. So the miners have been underperforming gold. Weekly chart, daily chart. It got going. Look at the volume spike on the gap reversal. Now, a bar that big suggests it's good. The momentum's going to stall, and big volume spike there. There was a lot of sellers. Common sense. It was going up. It gapped up. They took the money. Omar asking me, what do you think about indicators that contain price, volume, and time showing large lots buying over time? Such as, Omar? What would you call such an indicator? TVS. I don't know. TVS. TSV. I probably wouldn't think much of it, tell you the truth, but
You have TSX.
yeah. TSV. Time segmented volume. What do I do with that? What do I do with that? It's got a setting, got two settings, which is the difference. It has to be between two moving averages. It's above or below, kind of like the same histogram deal. And so now it breaks down under the moving average. Okay. So what? So what? It was going up here. It had this big bar. It's consolidating. There's nothing to do. There's nothing to do. You don't need this stuff. Look, there's tons of indicators in here. Look at all this stuff. Look at all. Which one? There's tons of stuff. If possible, can you make a video training journal that's type of knowledge we note in our journal? That's in the swing trading course. Showed you how to set up the journal. The Microsoft OneNote. It's a platform that comes with Microsoft. And you set it up, it's like a notebook with, how you have those tabbed notebooks, colored tabs. And so you set up tabs in there, for whatever you want. Good trades, bad trades, woulda, coulda, shoulda. Why the hell did I do that? And you set up your different tabs with your different trades. And, you put your criteria in there, why you took the trade. You could even record your voice. You can mark it up, put notes on there. It's a great piece of software. A few other things. Well, we split it. Look at Tesla. Look at the volume on Tesla. As this was moving down, look, there it spiked and it stopped the move for a while. Breakdown on volume. Now look at that volume on the gap up. Look at that volume. So now it's pulling back. I believe institutions are going to be buying this in this area here. As we look at this and we look at that volume, so there's a spike bigger than that one. But as we look at the volume spikes that have occurred, and I'm putting the cursor on there, that volume spike in Tesla is tremendous. That's institutions that are buying. Amazon is talking about indicators. I don't know, a crystal ball. I get you. I can't look at Julia. I can't look at the mini Russell, but this platform doesn't have futures. But IWM. You want to look at intraday charts, but just come into the green room. You can see it's trending. It's trending down on a 5-minute chart. It's kind of bottoming out here. Everybody's waiting for the Fed to do nothing, and then whatever they're going to say at 2:30, which will be more of a moving. Yeah. Maybe saying I'm investing long term, so focus on weekly charts and don't look at daily charts. That's your choice. You don't have to look at daily charts. But of course, the money management has to be based on daily charts. So anyway, if you subscribe to the letter in the green room, we'll answer your questions. You'll learn a tremendous amount. And that's it. We'll be back next week. If you have questions, email
Thank
us.
you for listening to Master Trader Live. If you liked the show, we invite you to share this video on your timeline or tag a friend who wants to learn stock market tips. Stay educated with our free chart of the week, a weekly analysis or lesson sent right to your inbox. We're live every week, and you can subscribe to the channel and press the bell to get alerts. If you've enjoyed the event, please give us a thumbs up. Just visit mastertrader.com. That's mastertrader.com.